First quarter housing data is out, and so I want to take a little bit of time to catch everybody up on what the local housing market is looking like. We are seeing a significant shift in market conditions. I see that on a day-to-day basis with clients, and we can also see that showing up in the data. But we are still very far away from anything remotely resembling a crash or a fire sale happening. We are certainly seeing the market shifting more in favor for buyers right now. There's more inventory out there. Homes are sitting on the market for a bit longer, and buyers, in some cases, do have more negotiation leverage. However, we have been in such a strong seller's market for so long and have so far to go before we actually get into a true buyer's market. We are still in a seller's market, and the market still does favor sellers despite the recent changes over the last few months in market conditions. The amount of inventory in Northern Virginia provides a great example of this. While we're about 60% higher year over year in the amount of homes for sale, we're still about 48% less inventory than we were in 2018. Now, there was all this talk about 6 to 8 weeks ago that everybody was putting their house on the market and everybody was fleeing the area in response to DOGE. That wasn't true then, and it's still not true now. On average, nationally, the amount of new listings coming to market is up a little over 5% year over year. In Arlington, it's about 5.5%. In Fairfax County, it's about 8%. In Loudoun County, it's about 21%. So while it does look like homeowners locally are selling at a slightly faster pace than those around the country, and Loudoun County's roughly 21% year over year increase in new listings might seem a little alarming, keep in mind that in order for Loudoun County to match the amount of listings that came to market in Q1 of 2018, they would have had to see a 76% year over year increase, not a 21% increase. And finally, I want to touch a little bit on prices because that's really what people care about. If you look at the average sale price in Northern Virginia in Q1, it was actually up 7.4% year over year compared to Q1 of last year. However, that is a little bit misleading if you are trying to draw conclusions on how the market and prices are responding to DOGE's federal job and spending cuts. Most of that sales data, those sale prices, are reflective of market conditions in late 2024 and early 2025, which was before DOGE really started to dig its nails into the local economy. So if you're really interested in how prices are responding to these new market conditions, you're probably going to need to hang on until sometime this summer, especially when Q2 data is available, to really start to understand how prices are responding to current market conditions. The leading data indicators like inventory and absorption do suggest downward pressure on prices, and I think we'll start to see that reflected in Q2 data and summer and fall data points. If you'd like a much more detailed analysis about what's happening right now in the marketplace and some great charts to illustrate it, just check out this week's Ask Eli column. Thanks for watching.